Two people walk into the same dealership. Same car, same day. One walks out paying $29,000. The other pays $42,000. Same car, $13,000 apart. The only difference is a 3-digit number they never see on the window sticker. This is your life at every level of credit score, from 300 to 850. Level 1, 300 to 499. If your score is here, the financial system barely acknowledges you exist. You apply for a basic credit card, denied. You find an apartment you can afford, fill out the application, and the leasing office calls back to say they need 3 months security deposit, or they just say no. You want a phone on a monthly plan. The carrier says prepaid only. You set up a new electricity account, and the power company asks for a $200 deposit before they'll turn on your lights. You need a car to get to work. No major lender will approve you. The only option is a buy here, pay here lot. The kind that puts a GPS tracker on the vehicle and repossesses it if you're 8 days late. The interest rate on that lot right now averages over 21% for a used car. A $15,000 car at that rate, financed over 5 years, costs you nearly $27,000 by the time you're done. Insurance is worse. Most states allow insurers to use your credit-based insurance score to set your premium. In this range, your car insurance can run 40 to 100% higher than someone with good credit. Same coverage, same car, same driving record. And some employers run a credit check before they'll hire you. Not every industry, but finance, government, security clearance roles. If your report shows collections or a bankruptcy, some doors close before you even get to interview. Your coworker sits in the next cubicle. Same company, same hourly wage. Her score is 710. You both bought a similar used car the same month. Her monthly payment is $150 less than yours. Her insurance is $80 cheaper. Her apartment only required 1 month's deposit. You put down 3. By the end of the year, she's spent almost $4,000 less than you. Same paycheck, same hours, same purchases. But everything you buy costs more. Not because you chose something more expensive, but because the system tagged every price with a surcharge you never agreed to. At this level, saving money isn't your problem. You're already trying. The problem is that every dollar you save gets eaten by higher rates, bigger deposits, and more expensive insurance before it can do anything for you. Level 2, 500 to 579. The door cracks open, barely. You can get a credit card now, but it's a secured card. You hand over $500 as collateral, and they give you a $500 limit. Or you get approved for a subprime card with a $300 limit, a $75 annual fee, and an APR above 24%. Apartments are possible, but the nicer complexes still reject you or demand double deposits. The one that finally says yes charges you first month, last month, and a full month's security, 3 months of rent before you sleep there once. A car loan gets approved. The rate right now sits around 13 to 19%, depending on new or used. A $20,000 used car at 19% over 5 years means you'll pay nearly $32,000 total. $12,000 in pure interest. Money that builds nothing, goes nowhere, buys you nothing except the right to drive. Everything at this level has a toll booth. You're allowed in, but you pay a premium at every gate. One thing working in your favor, this tier responds to time. 12 to 18 months of on-time payments, keeping your utilization low, not applying for new accounts, your score starts to climb. You don't need to earn more money, you need to not miss payments. That's the lever. Level 3, 580 to 669. This is where the majority of Americans get stuck. The The national average FICO score right now is 714. If you're in this range, you're below average, but you don't feel below average. You have a car, maybe a lease. You have credit cards. You might even qualify for a mortgage. And that's the trap. FHA loans open up at $580. That's the federal minimum for a 3.5% down payment. So technically, you can buy a house from this tier, but your mortgage rate will be noticeably higher than someone at $740. Right now, the average 30-year fixed rate is around 6.5% for top-tier borrowers. At your score, you might be looking at 7.5 to 8% or higher. 1 percentage point on a $350,000 loan adds roughly $60,000 to $70,000 in total interest over 30 years. That's not a fee. That's a second car you'll never buy because the money went to your lender instead. Your auto loan rate is in the 9 to 14% range. Your credit cards still charge above 20%. You can borrow, but everything you borrow costs more. Saturday afternoon, you're in your yard and you see your neighbor pull in with a brand new pickup truck. You do the math on what you still owe on your car and feel like you're standing still. But here's what you don't see. His truck loan is at 4%. Yours is at 12%. Over 5 years, he'll pay about $39,000 total for a $35,000 truck. You'll pay about $34,000 for a $25,000 car. You bought the cheaper vehicle and ended up paying almost the same total amount. The difference didn't become anything you can see or touch. It didn't go toward your car. It didn't stay in your bank account. It just evaporated, straight into your lender's margin. You think you're building something, but inside what you're building, there's a leak. You just can't see where it is. The dangerous part of this level is that it feels fine. You're not getting rejected. You're not paying triple deposits, but you're quietly overpaying on every financial product you touch, every single month. Over a decade, the gap between you and someone at 720 adds up to 6 figures. Getting out of this tier usually takes 12 to 24 months of consistent behavior. Utilization below 30%, 0 late payments, no new accounts opened impulsively. It's not exciting, it's not fast, but the payoff is enormous. Level 4, 670 to 739. This is the turning point. You walk into a bank and the loan officer doesn't look at you like a risk. Your mortgage rate drops into a normal range, around 6.5% instead of a full point or more above it. Over 30 years, that rate difference means you keep $60,000 or $70,000 that someone in level 3 hands to their lender. Your credit cards start offering rewards, 1.5% cash back, maybe 2%. Sign-up bonuses appear. For the first time, a credit card is giving you money back instead of extracting it. Auto loans drop into the 4 to 6% range. That same $20,000 car costs you about $23,000 total instead of $32,000. $9,000 of difference. Same car, same income. Renting is effortless. Background check clears, standard deposit, no questions. Insurance premiums settle into a normal range. The feeling of this tier is the absence of friction. You stop thinking about credit. Nobody's asking for extra deposits. Nobody's charging you a penalty for existing. The system just lets you through. From here to level 5, the gap is mostly time. You don't remember which month you crossed 740. There was no notification, no celebration, no email. You just opened your credit monitoring app one morning and saw a number starting with 7, and you stared at it for a second. Think about what you actually did. Nothing dramatic. You didn't pay off some massive balance in one shot. You didn't hire a credit repair company. There was no secret trick. You just paid your bills before the due date for 24 straight months. You kept your utilization under 20%. You resisted the urge to apply for every pre-approved offer that hit your mailbox. That's it. It sounds like nothing. but 24 months of nothing stacked together pushed you across a line. And on the other side of that line, your mortgage rate is nearly a full point lower. Your credit cards offer 3 to 5 times rewards, and your auto loan rate dropped from 6 to 3 something. No single month mattered, but every single month was necessary. Level 5, 740 to 799. The system starts working for you. You qualify for the lowest mortgage rates available, around 6.3 to 6.5% on a 30-year fixed. On a $350,000 loan, compared to someone at $620 paying 8%, you'll save over $100,000 in total interest. $100,000. Same house, same street, same number of bedrooms. Credit cards at this tier are premium. 3 to 5% cash back in rotating categories, travel points, airport lounges, no foreign transaction fees. You might pull back $1,000 a year or more just from spending you do anyway. Auto loan rates dip below 4%. Sometimes dealers offer 0% promotional financing. You're not negotiating. The system hands you the best terms automatically. But the real reward of this level isn't any single rate or card. You wake up in the morning and pick up your phone. Back in level 1 and level 2, the first thing you did every morning was check your bank balance. You'd mentally sort which bill was due today, which one could wait 2 days. What would happen if this week's overtime check came in late? Your brain was doing math before your feet hit the floor. At level 5, you wake up and check the weather, or the news, or nothing. You don't remember the last time you looked at your bank balance out of fear. Not because you suddenly have more money, but because nothing in your financial life is about to create a crisis this month. Autopay is running, rates are the lowest tier, no deposits or penalties or fees are waiting for you. Your brain is free. That sounds small, but it changes the way you make every other decision. You can spend 3 hours researching an investment account instead of 3 hours calculating how to shuffle a balance between 2 credit cards. You can say, let's put an extra $500 into savings this month, instead of, can we make it to the end of the month? The best interest rate saves you money, but the mental space saves you something bigger. It saves you from making worse decisions under pressure. Level 6, 800 to 850. You might think this is the final unlock, the ultimate reward tier. It's not. The practical difference between 760 and 820 is nearly zero. Same mortgage rate, same credit card approvals, same insurance pricing, same auto loan terms. No financial product on the market offers a better deal to an 820 than a 760. About 25% of Americans have scores above 800. They're not getting a secret rate. They're not unlocking a hidden menu. What 800 plus actually gives you is a buffer. If something goes wrong, a missed payment, a hard inquiry, a spike in utilization, you drop from 830 to 780. And 780 is still in the best tier. You didn't fall off the cliff. But if you're at 750 and the same thing happens, you might dip below 740. Suddenly, your next mortgage quote is half a point higher. That's the only functional value of 800 plus. Insurance against the bad month. So if you're spending time and energy pushing from 780 to 830, the return on that effort is essentially zero. The system's rewards have a hard ceiling. It punishes the bottom almost without limit, but it stops rewarding the top very quickly. Remember that dealership? 2 people walked out. One paid $13,000 more for the same car. But he'll probably never know, because no one put both receipts side by side. He's not less hardworking. He might work harder than the other guy. He might pick up 10 extra hours a week. But every extra dollar he earns, the system takes back a piece through interest rates, through deposits, through insurance premiums, through pricing differences he's never seen. They made the same choices, bought the same car, rented the same kind of apartment, applied for the same kind of loan. But the system charged them different prices for the same decisions. One played on normal mode. The other played on hard mode. Both of them thought they were playing the same game. You don't need to hit 850. You really don't. But you need to know which difficulty level you're on right now. Because the distance from your level to the next one might be 12 months of one behavior change. And that single jump could save you more than a 10% raise. You just have to see where the system is overcharging you first. Now you see it.